Pay nothing unless your debt is reduced or completely resolved.
I'm just living sky high right now. I'm very thankful for it, and the team at BetBlue are phenomenal. They're able to work with you. They're great.
Call for your free debt resolution information now. 800-200-6895. 800-200-6895.
Financial Focus with Leo Leiden. Weekday mornings 8 to 9 on WBNW, 1120 AM and 102.9 FM. The Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hope everyone had a fantastic Mother's Day weekend. It's Chuck, Mike, and Tucker with you. And as we kick things off in what is likely to be a fairly, I don't want to say pivotal week, because I don't think this is a pivotal week, and this is why this gets back to the definition of pivotal. So we're going to start off being really pedantic on a Monday, which is just a great way to get people interested in what you're talking
We're
about.
going to define the word pivotal for
Here's
you
why
all.
I don't think this is pivotal. If inflation comes in hot again, 0.4%, let's call it, on headline and core.
Yep.
Nothing's changed. It's just, okay, the story is continuing from what we've seen before. If inflation comes in at 0.2% or below, or something like that, the story is, okay, we got one good print, but we got to see more of those. This week alone is not going to make or break anything. So I know a lot of times everyone tries to gin up all this excitement, like, hey, this is the most important week. This is not the most important week ever. It's not even the most important week of the year. It might not even be the most important data week of the month.
Top 5?
Of the month, yes.
Of the year?
No.
Okay.
No,
Yeah.
I'm going to talk this one down, because if all I do is talk it up every time, then I'm the boy who cried wolf. This is one where you say, look, I'd like to see this inflation trend break, but ultimately, if it starts to show signs of breaking down, and if the inflation picture starts to improve here, it really is that next one, because that next one is also dovetailing with a Fed meeting on the same day. And as I said last week, I might not agree with it, but if you get 2 in a row that print good core CPI numbers,
Fed might cut.
the Fed has the potential to say, yup, we can do it. So this one here, it matters. It's important. It's not something that I'm going to, plan my life around more than I already do, because I already look at these every month. But
So important distinction. While not pivotal, while not likely to change the overall narrative substantially in terms of actions that get taken, potential for market action almost certain.
Yes.
So the S&P 500, for example, is now up 3.7% just through the first 13 days and however many trading days there have been of the month. And so in either case that you just described, you could have a pretty substantial equity market sell-off or gain on depending which direction that data goes.
And the seeds for this are already starting to be sown here. So what we have right now, the S&P 500 is pretty much flat today. It's up 6 points. It's not moving at all. But the VIX, the VIX is how you spell that. If you're not familiar with it, the VIX is often known, it's referred to as Wall Street's fear index. And really what the VIX is telling you, more than anything else, is, hey, over the next 30 days, here is the volatility that is expected in the S&P 500. Now, the VIX right now is coming in at a reading of 13.5. And those of you listening are like, Chuck, what the heck does that mean that it's coming in at 13.5? And this is a great question. So 13.5 is the expected volatility for the S&P 500 over the next 30 days. If you try to translate that into, hey, what does that actually mean for markets? Basically what you do is, and it's kind of a long process to get there, but long story short is there's 250 trading days in a year, and so in order to get this into daily numbers, pretty much what you do is you take like the square root of 250 and then divide this into it. Long story short, this market is pricing in about a 0.8% move on a daily basis over the next month, which is not a ton of volatility, but here's why I say that this does matter. When the VIX closed on Friday, it was at 12.5. Now it's at 13.5. The VIX typically rises in one of two situations. The first is markets are selling off and everyone is buying puts, and so the price and the expected volatility of markets goes up there. So it's usually on down days where you see the VIX rising. The other time that you see it is when you have potential one-off volatility events like a CPI release or a Fed meeting or something like that. You might see the VIX rise leading into it, and that is an indication that market participants are hedging and expecting more volatility in a short period of time. And then what ends up happening is if things come in as expected and the worst fear doesn't materialize, all that VIX gets burnt off, those puts disappear because they get sold back into the market, and equities typically rally, and that is the classic climbing a wall of worry that you see. Like the VIX is pretty much your wall of worry.
So let's talk a bit about that schedule that we have going on this week, shall we? So tomorrow, Tuesday, May 14th, is when the producer price index comes out. This actually usually comes out a day after CPI. This month it's coming out
backwards. I don't know why.
Backwards this month. You do have both Lisa Cook and Jerome Powell, Federal Reserve members, speaking tomorrow as well. And then
we got two more Fed members today also.
Correct.
Jefferson and Nestor. I mean, how could we possibly go a day without two Fed speakers?
Well, we had 9 Fed speakers last week, and that is continuing this week. Wednesday, that would be. Consumer Price Index does get released at 8:30 a.m. U.S. retail sales does as well. Some home builder data, but yeah, all eyes on that CPI.
And two more Fed speakers as well.
Yes, yeah.
Kashkari and Bowman.
You'll notice that I am de-emphasizing this a little bit because I really don't think we need to hear more from them.
But we got two more on Thursday, too, Barr and Harker. And Bostic. Sorry, we get 3 then. And then Waller's on Friday. We got 10 this week, Mike.
After 9 last week, like I mentioned. So the other piece of data that, sneaky, keep an eye on too. Thursday we have initial jobless claims, and I only say to keep an eye on that one because last week's initial jobless claims surprised to the upside.
They did.
Again, you don't really look at one data point here, but you had 231,000 initial jobless claims last week, which was actually the week before because it measures last week's data. And if you got a few of those in a row, then you might be looking at a higher unemployment rate coming in at some point in the future. These are pretty real-time data points that we have on the state of the labor market. So there's earnings as well, but those are the big economic data points that I have on my mind for this week.
Yeah, and the earnings picture for Q1 is pretty much wrapped up at this point. According to FactSet, 92% of S&P 500 companies have reported, and 78% of those have reported a positive surprise, 59% reporting a positive revenue surprise. Year-over-year earnings growth rate's 5.4%. The expectation before the quarter was 3.2%, but if you rewind even a quarter before, expectations were at 5.7%. So you're pretty much coming in line with pre-revision estimates. S&P 500 is trading 20.4 times forward earnings, so it's priced steeply. And this gets at something that we talked about last week, which is that companies that have beaten, they haven't really outperformed the market by that much in this month. They've been, slightly better than the S&P 500. Companies that have missed on earnings, they've gotten punished. They've underperformed by about 5% so far this month. So it's something where because stocks are expensive, beats are not really giving a whole lot of additional upside to stocks right now, and misses are being punished pretty ruthlessly.
Yeah,
in this
and I
market.
think that in part makes sense given you don't have the tailwind of dramatically lower interest rates that people thought you were going to have at the beginning of this year. So it's shaping up that direction that, you're getting punished for a miss. You're barely getting rewarded for a beat. And I think in the context of rates that, I don't know where expectations are now, but there was an expectation of 6 rate cuts being baked into 2024, and that's clearly off the table for the time being.
Mike, are you a fan of zombies?
I mean, there's been a number of good zombie movies over the last few years. I don't think I would like to meet one in person.
I'm generally not a zombie movie fan.
No?
They very rarely have anything new and interesting at this point. They can be well done in the zombie movie or zombie show genre, but very rarely do they offer a new perspective. You don't get to understand what the zombies are thinking. You don't really get inside their brain. Like it's just kind of they're zombies.
Top zombie movie or series for each of you?
The Last of Us right now is up there.
I still haven't watched that.
No.
I was going to go
It's
Last
good.
of Us and Shaun of the Dead.
I was going to go Shaun of the Dead.
Yeah. Anyway, that's not what we're talking about, is it?
No, instead we're going to talk about zombie inflation after this. Even the zombies are becoming inflated, and so we'll talk about that when we return.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
If you want to leave behind a financial legacy for your family, you need a proper estate plan. Hi, this is Chuck Zodda from the Armstrong Advisory Group. In our new monthly guide, we'll explore how and why the estate planning process is crucial to help you build a plan that will afford you comfort and peace of mind as you enter your retirement years. The guide is called Leaving a Financial Legacy, and in it, we'll we'll unpack ways to create a plan that takes into account your entire investment portfolio and your business holdings, including real estate. We'll also explore strategies on how to mitigate your risk from long-term care costs, which could affect you in the future. Call right now at 800-393-4001 to request a copy of our new guide, Leaving a Financial Legacy. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, there's a piece in Business Insider this morning. It's titled The Zombie Inflation. By the way, we were talking about the word zombie in the last segment. So I wanted to know the etymology of the word zombie. The first thing, it's relatively new. The first known reference to it is in 1788. And the oldest attested sense in English, I'm quoting from Etymology Online, is spirits of dead wicked men that torment the living. So not exactly how we refer to zombies today. The other thing that's interesting, so in terms of the frequency of its usage in the English language, Etymology Online, they basically grab like every book that's written and throw it into a funnel and say, okay, how often does this word come up? Etymology Online shows that right now, the word zombie appears 2.3 times for every million words published.
Okay.
If you go back to 1970... Actually, even go back to 1980. It was less than 0.1 of every million words published. The word zombie basically never existed in the English language until the last 40 years, which proves to me that no one really cared about zombies when they had other real problems to worry about. It's only now that we're worried about the dead resurrecting themselves out of graves and coming to, kill us all. We might have been afraid of ghosts, but not zombies.
Yeah.
Zombies are a new thing, and specifically,
maybe
there's a
fear
big
of
inflection point in 2002.
Yeah.
And all of a sudden, we got really nervous about zombies.
I'm sure that there was, in 1980, maybe it was just sharks that we were afraid of instead of zombies. Maybe the fear factor just rotates. But anyway.
Zombie inflation. What is it, and why should I care?
It's a silly term, but it's the basic idea that a lot of experts. I was considering putting them under quotes, but these are genuine experts. These are people that work at the Federal Reserve and economists for major corporations and governments were taken by surprise by the resurrection of inflation, if you will. The resurgence in inflation that we saw in the first 3 months of the year was not exactly planned, according to Neil Zodda in his piece here, and it caught a bunch of people by surprise. And then goes on to conclude that he doesn't think that this is that big of a deal, and while it was surprising, that it might be a trend in the other direction, and here's the evidence that he lays out, which is reasonable evidence.
He lays out reasonable stuff, yeah.
I could come to the same conclusion. But my main piece of this is that it caught so many people off guard, and I can't quite understand why. I just cannot understand why people were so unbelievably surprised that inflation was running in one direction and then for the last 3 months has been running in the other direction. That is the kind of prime lesson from other periods of inflation, is that it takes economic sacrifice to get it down. We didn't have any economic sacrifice. It came down anyway. And then people were shocked that inflation has, again, just for a short period of time, come back here. And so more than everything else, and again, we've covered the reasons how inflation could come down. We've been waiting on housing inflation for a year and a half to come back down. There's no particular area like oil that's driving inflation like it was in the 1970s. And so reasonable to assume that inflation could come back down. I could buy that argument. My main concern is why everyone was caught so off guard by the resurgence that we saw this year, because to me, it just kind of followed a normal trend here that we would expect, that, hey, without economic sacrifice, without wages coming down, without unemployment ticking up, it's going to be difficult to permanently lay inflation to rest.
I'm not saying that I share this view, but here's how I would say a lot of people ended up getting caught off guard. In the latter half of 2022 and 2023, you started to see progress made, but it was slow. In the second half of last year, you did see inflation numbers that were printing, on a monthly basis, right where the Fed needs them to print.
Oh, yeah.
Like the second half of last year looked really good. And so I think that the piece that a lot of people said is, look, this now, appears that the worst is behind us. Income growth is still, hotter than before, but it's slowed. There's no new supply shock that's coming in. There's no, huge new demand stimulus program or anything like that that's rolling out. In theory, all else being equal, yeah, this this could continue. Now, I'm not saying that I shared that view. Remember, I've said all along that I thought that the Fed victory lapped a little bit too early here.
Yep. And Neil Dutta brings that up, right? He brings up the three-legged, he calls it a triangle, but it's clearly the analogy is a stool here, so I don't know what he's thinking. But three areas that, can cause the inflation would be, one, inflation expectations, and we get a lot of surveys
actually,
on that one.
Mike, it actually does work for a triangle. The more I was thinking about it.
Triangles don't have legs.
They do. If you refer back to trigonometry.
They have legs?
Let me do the right. If you refer back to trigonometry,
okay,
it's the leg, yeah.
All right, fine.
They can be legs. I had to think about it too. I'm guilty I'm just as guilty.
The second piece of the is aggregate demand. So if you suddenly have more to spend, like we did back in 2021, then inflation can surge. And the third is supply shocks. And so, to your point, they looked at that stool and said, look, the supply shocks piece doesn't seem to be happening. And aggregate demand, we're not seeing any new stimulus pouring in here, even though it's a tight labor market. And so that was the expectation. It was like, if two of these three legs are in pretty good shape and expectations were also coming down at a reasonable pace, then we shouldn't see this resurgence in inflation. I guess my counterpoint would be, I'm not sure that this is a great short-term inflation predictor.
No, I think it's much more, okay, over, 2 to 3 years, right. Here's what should happen. So I think that where we continue to stand right now is in a situation where, hey, you've got to see renewed improvement on the inflation data. Otherwise, you get to a point where you say, look, if we're kind of, bottoming out and floating around 4%, I mean, the core CPI right now is at 3.8. And this cycle, it has not gone below 3.76. So if you're just floating around right there, it puts you in a precarious spot where, hey, if something unexpected does happen, there's a quick path back to like 6 or 7% inflation.
Yeah.
And the two things about that matter. The first is people don't like it. Prices go up and your wages go up, you're like, why am I not getting ahead? It's a really frustrating experience. It's like when you go out for a walk in the woods and you're like, I've passed this tree before. What the heck's going on?
As displayed by the Federal Reserve's own data that 57% of American households have not kept their wages on pace with inflation.
So that's part one, is people don't like it. Part two is just think of it from a math perspective also. If prices are rising at a 2% rate annually, takes between 35 and 40 years for prices to double. It's a long time. That's basically a working career is how long it takes.
Yep.
If prices are rising 4% a year, prices are going to double in about 15, 16 years. And if prices are rising 7% a year, they double in 10. There's a big adjustment psychologically that has to happen to even be able to stomach that, because it's not something that just happens in the background slowly. Right. It's something that is very front and center and in your face. So zombie inflation, not a good kind of inflation.
Yeah.
And I was thinking about types of zombie movies that I'd like to see. Talked about it during the break. What about a zombie movie where one group of zombies fights another from a different movie, a little crossover? I think it could be good.
With a tornado involved.
Yes, Twister Zombie. Let's take a quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Proper estate planning is crucial to you being able to enjoy your later years. And it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, coming off the Dow's best week of the year, markets today are in positive territories. Inflation is again in the spotlight this week, with a PPI reading tomorrow morning and a big CPI reading on Wednesday. Retailer earnings are also on deck to gauge the latest on consumer spending. Right now, the Dow is up by just under 0.25% or 63 points. S&P 500 is edging 4 points higher, and the Nasdaq is up by about 0.25%. Russell 2000 is actually up by 1% so far today. 10-year Treasury yield down by 3 basis points, now at 4.47%. And crude oil up about 1.5%, trading at $79.37 a barrel. Well, meme stocks, GameStop and AMC are back at it again after Roaring Kitty posted to Reddit for the first time in about 3 years. So far today, GameStop has been halted multiple times, currently up by about 84%, while AMC's stock is up by 20%. Meanwhile, according to the Wall Street Journal, Intel is in advanced talks in a deal with Apollo Global Management, in which Apollo would supply more than $11 billion to help Intel build a plant in Ireland. The exclusive talks could come together in the coming weeks, assuming plans don't get derailed. Intel shares are up by about 4%, while Apollo stock is off by 0.75%. Sticking with the chip sector, where ARM Holdings stock is jumping 3% after Nikkei reported the chip maker is looking to launch its first AI chips next year and hopes to build the prototype by this spring. Elsewhere, Squarespace shares are up by 13% after the website platform company announced a $6.9 billion deal to go private with private equity firm Permira at $44 per share, or 15% premium as of Friday's close. And tomorrow morning, we'll see the kickoff to retailer earnings due out this week, where Home Depot will report first quarter results ahead of the opening bell. I'm Tucker Sullivan. That's Wall Street Watch.
Mike, in the news over the last week, the Healey administration in Massachusetts has proposed what is being dubbed a mansion tax. And what the proposal is, I'll quote here from this is from Barron's, where I read about it initially. The proposal allows local authorities the ability to impose an additional 0.5% to 2% transfer fee on property sales above $1 million or a county's median sales price, whichever is higher, and use the proceeds to fund affordable housing projects. Do you want to give your thoughts, or would you like me to give mine?
Go ahead. You're on a roll.
So the first piece, people say, nothing like this has ever been done before. Well, the first thing is, anytime that you sell a home, one of the things that you do see is that every single home in the state of Massachusetts requires a transfer tax today, actually. I don't know if anyone knew this.
I don't think I recalled this.
Every single home does. And the rate in Massachusetts for a real estate transfer is $2.28 per $500. So for a home that's worth, and this is just the example that I quoted here, it's from some website called Clever, but I don't know. It's just they did the math. Median home price in the state was $612,000. The transfer tax due is $2,818. It just comes off, if you look at your closing, your HUD-1, it just comes off as a line item on your HUD-1.
So what's that percentage?
It works out to little less than 0.5%.
Oh, so this would be on top of that.
On top of that, and for homes over $1 million. So the first thing is, anytime that you sell a property in Massachusetts, you pay one of these. So I don't inherently have a problem with the idea of, hey, when you transfer a property, you pay a tax, because you already do.
Sure.
What I do have a problem with is, for some reason, this $1 million idea is just bothersome to me, because in Massachusetts in April, according to the Greater Boston Association of Realtors, the median single-family sales price for all of Massachusetts for the month of April was for the month of March was $580,000. New all-time high, up 7.4%.
Yep.
For the Greater Boston area, it pushed up to $900,000. So where I have the problem here is the idea that, $1 million, it must be a mansion. Yes, if you are in Western Massachusetts, it absolutely is.
Not necessarily, by the way.
Not in all parts of
Right?
it.
Like,
If
Massachusetts in
If you're
general.
in lots of parts of Massachusetts, $1 million is going to get you a fantastic place that could be a mansion.
Agreed.
If you're in Topeka, great. You got a whole block to yourself. Not even a block, because it's probably just like you got land. There are parts of the country where it is. When you look at, inside 128 and 495, there are homes that are very much not mansions for $1 million. And I guess where I'm going with this is, why is this $1 million threshold something that we necessarily target here? And because here's what's going to happen in Greater Boston then, is the places where property is more expensive right now, people say, okay, fine, I'm not going to sell my place if it's going to cost me more to sell it. You're going to end up with less inventory in those very places where people want to buy the most.
I'll take it a step further, too. Let's say you are the goal of this, right? The goal of this was to increase housing affordability.
Yes.
Which, in this case,
and you're putting a tax on housing.
Right. In this case, perhaps you are doing so by rolling out new affordable housing is the stated goal here, is what those tax revenues go for. But let's be honest, getting those things built in any community has been quite a challenge over the last
And not because of the
years.
lack of tax revenue.
Right. It's all been based on voters turning them down. But that's a story for another day. Okay, you go forward with this tax. Let's say we're not talking about affordable housing. Let's just say that you are a developer that wants to go build housing in that Greater Boston area where you're trying to increase affordability, right? That's where we're talking about this most prominently. I'm not going to go build. If I have the choice to build between the hot housing market of Boston or Portsmouth, and one of those I face a 2% tax on the sale of the property over $1 million, guess what? I'm going to New Hampshire. I'm going to Rhode Island. I'm going to one of these other states that also have a lot of demand for high-cost housing. Likewise, the idea of it being a mansion tax is just silly. California, or maybe it's just L.A., has a tax on real estate transactions worth more than $5 million. In their case, they only saw about 38% of their revenue coming from single-family residences, because you know what is also pretty expensive? Multifamily properties, commercial properties, industrial properties that all go well over that $1 million threshold as well, and may or may not.
So this is specifically targeting single-family sales.
So this is only single-family sales?
Yes.
They will not touch any. Okay, so again, why does that exactly make sense for me to not go after a multifamily as well? So, look, this is falling into the same category as a number of tax increases that I think are popular because it is popular to, poo-poo over millionaires.
Oh, no, sorry. This would include commercial transactions, too.
Okay, so, again, you're going to be hitting all of those up. So don't call it a mansion tax. I am sure that a very small portion of the revenues are actually going to come from individual single-family mansions. But the idea here is, in Massachusetts, we seem to be hating on millionaires, which, again, far be it for me to say whether or not you should do so. And if you want to roll out this tax, that's fine. But don't sell it as this idea that's going to make housing more affordable, because I think most economists would look at this and say it's not going to. It's not likely to do that.
The reason why affordable housing is not being built in the numbers needed to drop housing prices is because towns are voting against having affordable housing in them. Not just affordable housing, even any additional housing in a lot of cases.
Yeah. Doesn't need to be zoned for affordable. Just anything that would be considered dense housing is vastly unpopular in Massachusetts, but frankly across the country.
So I think, look, even if you wanted to do, let's say that you actually wanted to do a mansion tax, and I'm not saying that I do, but let's say that you wanted to do something like this. Okay, fine. The average home in, I wouldn't do it on a county-by-county basis, because then all you're doing is subsidizing Nantucket, and Nantucket doesn't need to be subsidized. Okay, let's call a spade here. Sorry, Nantucket listeners. Martha's Vineyard, you can throw yourself in that boat too, Dukes County. I think that when we look at this, you say, okay, the average, the median cost of a home, what was it, $580,000? Great. 4x that cost. Okay, fine. That way, at least, like, you're at least saying, hey, as prices go up, we're not going to get everyone caught in this thing. Okay, great. We can at least roll with that.
I don't want to give any credence to the idea that this is like, I'm with you that there are more intelligent ways to do this rather than just sticking $1 million pin in the board and making that your threshold. But I really need to focus on the idea that somebody thinks that this is going to increase affordable housing. There are so many easier ways that don't involve raising taxes and then subsidizing affordable housing, which you can't build anyway because none of the towns will allow you to do so. You are just going to be wasting tax revenue, decreasing transactions, and doing nothing to impact prices.
So let's take that to its logical conclusion then. The reason this is being talked about is because it has the potential to raise revenue without being a line item on a taxpayer's balance sheet or income statement each year.
Right.
Because not everyone sells their home each year. It's something where for the vast majority of people, this does not affect them in any given year. And so, okay, we don't want to touch the income tax because people see that, or we don't want to touch, the sales tax because people see that. Great, let's do this because, only a few percentage points of people sell their home in any given year. It feels more like that to me.
Yeah. So I know that a millionaire income tax was extremely popular. I'm sure if this ends up on a ballot initiative, it will also be quite popular. But I really want to try and get through people's heads that if you want lower housing prices,
don't tax housing.
Then A, don't tax
build more housing.
And B, go to your town meeting and vote for the dense housing that everybody seems to be voting against. If that's your genuine hope is for lower housing prices, then show up at the whatever town most recently shut down the MBTA zoning laws and show up and say, yes, that's what we want in our own town.
Because housing doesn't just get cheaper. It's not gravity where it pulls everything down.
My point would be that I'm not sure people actually want cheaper housing, because cheaper housing means that your home that you already own loses value. It's not some magic number that we're talking about here.
Let's take a quick break here. When we come back, let's talk a little bit about the state of global trade and what we might see if there is a second Trump administration.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
All right, piece in the Wall Street Journal talking about Robert Lighthizer, who was the U.S. trade representative under Donald Trump during the first Trump administration, and talking a little bit about what his priorities would be in a second Trump administration. What does he lay out?
Well, first off, he really wants to take things a bit of a step further, I think. He really views the first Trump administration as phase one of a reshaping of global trade, and to quote the Journal here, thinks the elimination of these imbalances, these are trade imbalances via tariffs, ought to be the overreaching goal of U.S. trade policy. So starting right there as a premise, this individual believes that the mere idea and the mere presence of a trade balance is not some natural occurrence in free market trade, but rather the direct result of government subsidies for industry, and wants to address that via
not necessarily
the
U.S. ones, but wherever in the world
Correct.
it may be happening.
Did I say U.S. policy?
No,
Okay.
But I just wanted to make clear to our listeners. So I'll read a couple quotes here. He added, every country should be exporting in order to import. If you're running chronic surpluses for a decade, then you are by definition a protectionist. You're engaging in industrial policy to help yourself. You're transferring resources from your consumers to your producers and trying to acquire other countries' assets. So it's pretty clear that this is talking about China, first and foremost. And I kind of make the case that China's the exception rather than the rule.
Yeah, most countries are not doing what China's doing.
Almost no one is.
Mm-hmm.
And the other piece is in areas where you can import things much more cheaply, that should be encouraged, actually. Like, if someone else makes something cheaper than you can do it domestically while still playing, while still having a level playing field, there's nothing wrong with saying, yes, we'd rather buy, something that's not, mission critical and not, a national security issue from someone else. So if China wants to subsidize production of Tickle Me Elmos, as I've said before, fine, give me all the cheap Tickle Me Elmos that you can. But when you engage in policies that start targeting, areas that are critical for national defense, I don't know that I necessarily share the same view, but I have gotten a little bit more towards, okay, like there's some national security stuff at play here. But otherwise, I kind of sit there and I say, well, look, if you want to make, T-shirts somewhere else because Americans don't want to work in T-shirt factories, and you're making them elsewhere. Well, fine. Like you had your chance to make them here, and it didn't really work.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations, tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Chuck, we were talking just before about trade with China and the national security concerns, and I wanted to spend one more moment there because the problem with just defining it as national security, you did a good job of listing a few that I share with you. I have zero concerns about national security. But this day and age, it is becoming such a slippery slope. And I want to mention a few that have been in the news recently, right?
Yeah.
So let's talk about some individual products. Semiconductors, cars, solar panels, social media, and cranes.
Sure.
So semiconductors, big national security concern, goes into
Huge.
all sorts of military defense. Buy it. Cars. I see the potential for abuse there, but it's a little bit less there. And yes, if you completely hollow out the American vehicle manufacturing sector, then you don't have a wartime apparatus to go and build those. So I can get that one. Social media. Ability to influence and spy on people. We've talked about that. I tend to agree. Solar panels. Well, I have a tough time arguing that one.
I can get energy from somewhere else. Make me all the cheap solar panels you want.
However, let's say there's an actual war and China has these internet-connected solar panels that allows them to completely shut down and power off the American power generating supply. I guess hypothetically I can buy it. Most of the time
that's not on the panel, that's on the inverter, which is a different piece. So if you want to say don't let Chinese-made inverters into the U.S., fine, I can get behind that.
Cranes that operate at shipping ports. Recently discovered they were all connected with modems that could be connected to the internet. Same story here, and we're getting to this slippery slope argument that pretty much every industrial product that China makes could be a national security threat, and I worry about that.
Maybe that's actually the problem.
Maybe it's the case.
Let's take a quick break here. Hour 2 coming up in a bit.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the biggest assets that any family owns is typically the primary residence. How do you have to navigate how to leave that to the next generation?
Well, sure, and important because unlike, say, a bank account where you can leave a child as a beneficiary, that's not really possible with a home. And so, sometimes at least having just a basic estate plan, which according to a report from LawDepot.com, 73% of U.S. adults don't have a documented estate plan. But, that's the starting point here, is developing an estate plan for your assets after you go.
Other things that you got to keep in mind, I think, hey, if you have multiple children, is there one that wants to inherit that home? And how do you balance that with the other assets that you might have so that children are being treated fairly?
Yeah, there's all sorts of concerns here, right? As I age, what if I end up in a nursing home? How do I protect some of that stuff? And let me just tell you, it is an area that has a high propensity for mistakes when it comes to how to handle your personal real estate, especially later in life. So definitely something to be aware of. Keep an eye on understanding not only the tax consequences of one action or another, but also the legal consequences of one action or another.
The guide is titled Leaving a Financial Legacy, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. Again, it's titled Leaving a Financial Legacy. You can request it at ArmstrongAdvisory.com or by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
A little bit after 11 here on the Financial Exchange. It's Chuck, Mike, and Tucker, and markets are doing a whole bunch of nothing today. The Dow's up 16 points, S&P's up 1, NASDAQ's up 41. So, again, really not much movement there. 10-year U.S. Treasury is down 2 basis points to 4.48. It's basically been hanging out there the last week and a half. Oil, West Texas Intermediate, up 85 cents a barrel to $79.11. We've got the AAA national average for gas prices down 2 cents over the weekend, now at 3.61 9/10 cents. So starting to see a little bit of movement downward, but we've only dropped about 2% from the highs that we had earlier in the month, where we were at about 3.67, 3.68 nationally. So not too much movement downward yet. And we've got gold today. Gold is down $24.70 to $23.50.30. Mike, there aren't enough babies.
That seems like a sharp reversal of where we were going just a few decades ago.
Well, let's talk about this a little bit.
Yeah. So we've known that demographics in the United States and across the Western world have been, trending older and fewer babies, and we've known about that. But I think a story that has dominated for the last couple centuries was the booming population in other parts of the world and the problems that was going to wreak problems on the food supply, on the environment, on all sorts of things. And we seem to be heading for a very sharp reversal of that.
Couple things that I need to talk about with regards to this. The first is, this is mainly a problem because we've built our societies and economies to require a larger number of people in perpetuity.
Yeah, I was going to mention this. That was what I wrote down on my piece here is this fundamentally, quote, bad? And I think only because of what you just mentioned is that many of our societal programs are built on the assumption that population continues to grow.
Ultimately, you, me, Tucker, and anyone else, we do not exist just to have the right number of children to grow an economy. It's basically the most dehumanizing thing that you can do. I mean, look, China had their one-child policy saying, hey, you can't have more than this. Imagine if China had a three-child policy saying you need to have 3 kids. Like, I
don't know which one is morally worse.
They both are horrible.
They're both terrible.
In one case, you're saying, no, I will not let you bring another life form into this world because we're not going to allow you to. The other is, no, you have to, even if you don't want to. And neither one is really good for our collective psyche as human beings. It's just really bad. So
Indeed.
It bothers me when the first thing, and this is a me problem, whenever I see stories about, we're not having enough kids, I'm like,
according to what?
Like, it's not your problem how many kids I have. Like, I'm going to have as many as I want, and y'all can take it and go somewhere else with it if it's a problem. But the question that is relevant here is, when it comes to the societies that we've built, they largely are built economically around ideas that, hey, you're going to have more people in the future, and if you don't, a whole bunch of programs break down, and I'm not just talking about Social Security and Medicare.
Yep. Yeah, it goes beyond that, but those are the easiest ones to grasp.
Think of it this, like, let's look at some of these towns that have been really hurt in the last, 30, 40 years by net outward migration from them. And they can be towns in the Midwest that were hollowed out. They can be towns in, Massachusetts and Maine and New Hampshire that, were old mill towns, and now they're just not producing anything there. It could be anywhere. And you look at what it does, and you end up in these, really tough spirals where, okay, the cost of government services stays the same. And when I say government services, I'm not talking about Medicare. I'm talking about, hey, to operate a sewer system, you got some pretty basic fixed costs. And when you have 10,000 people, you say, okay, if we each pay $100 a year, that's $1 million, and we can cover the cost of maintaining the sewer system between materials and wages and blah, blah, blah. Now we're down to 5,000 people. Our cost for maintaining the sewer system is the same. We all have to pay twice as much now in order to cover those costs. What happens, people eventually get fed up and they're like, no, I'm not living here anymore. The job prospects are getting worse because it's a shrinking population here. I'm going to go somewhere else. And this is what you see kind of at a micro level. The macro level, worldwide, again, there's no right number of people to be on planet Earth. So let's get rid of that stupid idea first. There's some people who are like, well, we should only have 4 billion people because first of all, how the heck do you know? Second, if there's one thing I don't doubt, it's humans' ability to figure stuff out with enough technology to make it work. And
Malthus had I think it was Malthus with the theory of the population would starve, and then, turned out,
turned out great. We can figure out how to produce more food.
Yeah.
Likewise, we can figure out those problems. So I don't believe there's any right number of people to have. But the question is, in these economic systems that we've built where you've got fixed costs and, you're expecting, hey, if more people come in, we'll be able to pay those and keep those in line. Well, what happens if that's not the case? How do we actually deal with that?
Well, and, at least part of why we got here can at least partly be explained by, gains in efficiency and therefore less of a need for labor and just different approaches to labor, right? 100 years ago, having 8 kids made sense because you needed some help on the farm, and that is not the same case today.
Not just that. 4 of them would die before they got to age 5.
Yeah, so that was definitely an impact as well. That might be an over-exaggeration, but yes.
That was child mortality, you go back 100 years, was basically 50% before age 5.
Got it. So in either case, here is the problem that concerns me, is that almost every nation, the United States is not alone in this, continues to design...
We're actually kind of the best of the bunch.
We continue to design our social programs based on what does not seem to be trends in population anymore. And so maybe that needs to be a shift of taxing labor to taxing capital. Maybe it needs to be a shift in something else. Maybe it needs to be a change in how long existing people stay in the labor force for longer. If they're not going to be having as many children, then there might not be the same expectation of when you're able to retire anymore. But the fact of the matter is that these are real world problems that, yes, are in part a result of these declining birth rates, but you are going to be far more effective by treating the programs rather than trying to fix the birth rate.
And the other thing that Mike's pointed out a few times is there are a number of European countries that have created all kinds of incentives for, like, hey, you've got a year of paternity leave, and here's money for having kids. And they haven't really moved the needle.
Very few of them, yeah.
They haven't really moved the needle. It's not an incentive problem is kind of where I've landed. Sure, like, you might want to make it easier for people to have kids just because having kids is not easy to begin with. But you're not going to have more people being like, you know what? Now that I get a year off of work, having
there have been a few very limited examples where that type of thing has been successful, but it has been a very costly and intensive program to address it from multiple different areas, societally, culturally, and fiscally, to incentivize a higher birth rate. And I'm just not sure that people want to invest the time, money, and effort that would require. And to know that it might not also be successful.
So this is something that is going to drastically reshape the world economy over the next 50 years. And demographics are a slow-moving train, but once you hit them, it's something where the piece that I wonder about just in the U.S. as an example, hey, you got baby boomers who are hitting their prime retirement years right now.
Yep.
And Gen Z, who is the generation coming into the workforce, it's no longer millennials. So all of you listening saying, oh, those millennials won't work, it's not us anymore.
It's already working.
It's not us. We already went through our not working phase, and now it's someone else. So don't blame us this time. It's those
youngins.
It's those Gen Zers. And look, I'm saying this jokingly, but ultimately the problem with the Gen Zers is not that they don't want to work, but there just aren't as many of them as the boomers that are retiring.
Yes.
And this is something where when we talk about what it could mean for the labor market may remain secularly tight for the next 20 years as this happens, because for every, worker that drops out who's retiring, you only got 0.8 workers coming in pretty much starting next year. Like, there aren't as many coming in, and so they're going to be in high demand. And does that mean that you have, a lot of wage pressure because there aren't as many people coming in as the ones that are falling out? Does it usher in an era that has potentially higher baseline inflation as a result? These are questions that I don't know the answers to, but you have to be asking because they're possible.
And the longer you delay them, the worse the problems get.
Yes. But the dumbest thing that we can do is be like, hey, you got to go have kids, because as someone who has to,
a lot of work.
If you're not all in when you have them,
yeah,
there's going to be days where you're like, whoa, what's going on here?
There's already days where almost every parent says, whoa,
right,
what's going on here? If you were having that child because the government paid you to do so, then
it's going to be worse. I can think of nothing worse than someone having a child just because the government made them do it and being like, now what do I do? Like, that is not a successful family, in my opinion. Let's take a quick break here. When we come back, we've got the trivia answer. And then we're
Trivia
talking
question. There's no answer.
What if we do it backwards today?
We'll give you the answer. You ask us the question.
We give the answer, and they have to guess what the question is.
I like that better.
We're gonna get some Tucker. We're gonna do that one day this year.
All right.
We're gonna get some.
I don't know what day.
July 5th.
No, I'll pick the day. But coming up, we've got the trivia question, and then we'll give the answer, the segment after the question, right here on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence at Castle Island. Registration's now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, Visit DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation. Well, time for trivia here on the Financial Exchange. Here is today's trivia question. On this date in 2019, Felicity Huffman pled guilty for her part in the U.S. college admissions scandal. Huffman was sentenced to time in prison, 1 year of supervised release, a $30,000 fine, and 250 hours of community service. Huffman didn't end up serving her full prison sentence. Trivia question today: how many days was Felicity Huffman sentenced to prison for? Once again, how many days was Felicity Huffman sentenced to prison for? Be the seventh person to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt. That's 617-362-1385, and the seventh correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Quoting here from, is this Bloomberg? Yeah, it is. Superpowers, led by the U.S. and European Union, have funneled nearly $81 billion towards cranking out the next generation of semiconductors, escalating a global showdown with China for chip supremacy. It's the first wave of close to $380 billion earmarked by governments worldwide for companies like Intel Corporation and Taiwan Semiconductor to boost production of more powerful microprocessors. And...
was that a Boston accented processes?
Microprocessors.
I was trying to go Departed. I didn't quite land it.
Okay, got it.
You know,
I got the reference. I got the reference.
I didn't. I'm sorry.
Microprocessors.
Got it.
So, in any case, you got all this money that's flowing out to build chips domestically, not just here in the U.S., but in the EU, the U.K., Japan, like you name it. Everyone wants chips built domestically.
Yeah. In the United States, we had a $39 billion in grants and for chip makers that was approved as part of that 2022 Act. From what I have seen, by the way, this investment the United States has been making has been paired with private investments of about 8 to 10-fold of that number in and of itself. So there is the government piece of this, and then there is also the business piece that is piling on top of the government spending in this area.
Now, when we talk about chip making, remember, we covered in an earlier segment that Robert Lighthizer, who was the Trump administration's U.S. trade representative back during his time in office, he said, look, I don't want countries to be running surpluses or deficits for the long run. I want everyone to try to be neutral. Taiwan, as an example, they don't export the most computer chips worldwide because they're subsidizing the industry dramatically or because they're keeping their currency artificially low. They do it because they're the only ones who can run these processes at scale, basically,
yep.
And they're really, really good at it. Likewise, the Netherlands with ASML, the company that makes the lithography machines that produce these semiconductors, it's not that the Dutch government is like, oh, we want to corner the market on semiconductor lithography machines. No, ASML just figured out that they could do it better than anyone else, and it just kind of happened. So it's not always about, something nefarious being afoot. Sometimes it's just one company figures out how to do something really well, and no one else catches up for a little while, for a decade or two.
Which is, by the way, I think part of the problem with Lighthizer's approach, and I'm not saying that this is right or wrong, but generally speaking, when one company or one country specializes in a certain thing, they can get really, really good at it. When you as a nation try to specialize in everything, oftentimes you're bad at all of them.
Now, semiconductors is one place where we've talked about, yes, we want them built domestically, but this might end up really bad economically for us because we probably can't make them as cheaply.
Yep.
Quite honestly, we probably can't even make them as well at this point. Maybe eventually we get to, but there's a reason why Intel's been struggling so badly. It's because they haven't perfected these next-generation production processes. And so it's going to be something that takes some time to get there. And I think one of the questions out of all this is, look, if you're throwing like $500 billion worldwide at all this stuff, we don't really know how this is going to end up, but not everyone's going to be really good at producing this stuff.
True.
You can't all be above average.
Big, expensive losers.
Yes. And the U.S. might have some of those.
Probably will.
And it's still fine because you still need to produce the stuff domestically, even if it loses a bunch of money. Now,
just recognize that that's a choice. I agree with that
yes.
choice. But that is a choice we have made, is that
yes.
we deem this so important that they must be made here domestically for the U.S. to maintain its dominance.
Yes. Now, if you want to, try the same thing with hacky sacks,
you could also do so.
It would be really dumb because you do not need hacky sacks to fight a war.
Right.
You do need computer chips today.
Mm-hmm.
Micro.
Served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line. We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the areas where we see a ton of confusion these days is with retirement accounts and leaving them to the next generation. It's just a complicated place right now.
Yeah, and to start, some retirement accounts were actually looked at by some as a really successful planning tool for generational planning, especially when you talk about Roth IRAs, for example. And the rules around that all changed just a few years ago. And so really understanding the taxation of these different assets is important when it comes to leaving a legacy.
When we talk about what goes into those retirement accounts, this has to be part of the thought as well in terms of minimizing taxation during your lifetime and that next generation's. You have to coordinate what's inside of them just to minimize the taxes during that time as well.
Yeah, so from that perspective, you have non-taxable assets like a Roth IRA. You have taxable assets that generate a 1099 every year. You've got traditional IRAs and 401ks. All of these have very different rules in terms of how they're treated, but the biggest change had to do with retirement accounts, specifically 401ks and Roths, and the rules that impact beneficiaries of those assets. And so if you're trying to utilize them as a legacy plan, important that you understand the new rules.
Our guide is titled Leaving a Financial Legacy, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
Trivia question today was, how many days was Felicity Huffman sentenced to prison for the college admission scandal there? 14 days. Huffman was sentenced to 14 days in prison as part of her sentencing. Huffman only ended up spending 12 days in prison because her release date fell on a Sunday, and prisons don't release prisoners on the weekend. So if your sentence ends on a Sunday, you will actually be released on Friday. Didn't know that. Keep that in the back pocket. Mark from Salem, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. And we played trivia every day here on the Financial Exchange. Tune in tomorrow for your chance to win. See complete contest rules at financialexchangeshow.com.
Are you intending on being sentenced to prison sometime in the near
No,
future,
it's good
Tucker?
to know. You never know. It's like, hey, I'll go in on a Sunday.
Yeah.
2 weeks.
Wait, so say that one more time?
So prisons don't release prisoners on the weekend. So if your sentence ends on a Sunday, you'll actually be released on Friday. So you can enjoy your weekend, of course, because you're a prisoner.
The previous Friday.
Yeah.
Not the following one.
No, of course not.
So
they
got
default to a little bit
2
earlier
days
rather than a little bit later.
Off of her
I
sentence.
wonder if that. I doubt that's a universal policy.
Might have been just specific to that one.
Yeah.
Why don't they
state-specific.
release people on Sundays? Like, the guards have to be there.
Closed.
Maybe you have a little bit of extra staff there on release days.
What do you have? What do you need extra staff for? You got one fewer prisoner.
Same reason, because you got.
You're going out, not in.
Well, yeah, but it's extra work to really, extra paperwork, all sorts of stuff, and you got to pay somebody time and a half on a Sunday.
Do the paperwork in advance.
Nah, man.
What, you can't do it a day in advance?
No.
Closed.
What if they release the wrong guy?
Yeah.
Don't you want to double check?
Yeah.
Nope.
We're closed on weekends. I don't know what to tell you.
Amazing. I mean, you would think that this is a business that has to operate 7 hours a day.
They actually
or 7 days a week.
They just watch themselves on the weekends.
We send
You guys are good.
We send everybody home and we just watch ourselves and the game.
Just watch Netflix.
Oh, boy. It's definitely not what happens in prisons.
No, not at all.
Let's talk a little bit about investment portfolios here. There's a piece in the New York Times that says, can your investment portfolio reflect your values? And my answer is no. What's yours?
My answer is yeah, but it's tough, and the tools that exist for it are not very good right now.
My answer is no, because ultimately, when you talk about the companies that you can invest in, there are, in a broad sense, relatively few of them. In the United States, I think you've got, right now, it's somewhere between like 4,000 and 6,000 publicly listed equities.
Yep.
There's millions of companies in the U.S., so you're limited
Sure.
to that subset of 4,000 to 6,000.
Yep.
Of that 4,000 to 6,000, the ones that actually focus on mission over profit are zero.
True.
Because legally, they cannot do that because they breach their fiduciary duty to shareholders then.
Yeah, I guess the question would be what your values specifically are. Because when they get really specific, I want to apply all of my I don't know, Christian values to investing, yeah, that's not going to line up because there are a lot of Christian values and no company is going to be perfect on all of them. But if you instead say, my only focus, because my mother was duped by cigarette companies for 30 years, the only value that I want to impose on my portfolio is to never invest in a tobacco company. That is actually still difficult to do.
Yes. And still own the broad index.
But achievable.
Yes.
If instead your values, like most of ours do, contain a dozen or more different priorities, many of which conflict with each other, then that's next to impossible. I'm right there with you.
It's almost impossible. When you say, "Oh, look, I want to focus on companies that are good for the environment."
What does that mean?
Okay, well, if you go and you take a look at, Apple just as an example, and their ESG ratings, okay, it's, triple B, so it's kind of middle of the road. Well, look, if you talk about Apple's environmental impact, I mean, like, they're using up a ton of resources. Like, you go through this stuff, and you twist you into knots, like you're just like a pretzel. ExxonMobil, triple B, same as Apple. Those two companies don't seem like they affect the environment the same way. So no matter what it is, whether it's something religious, environmental, social, whatever it might be, there's no good way to do this, because the other thing you got to remember is that management at any of these companies can change on a whim.
True.
You get an activist investor who comes in and says, nope, I want things done differently. Are you going to be paying attention to all that? It's really hard to do, which is why, as cynical as it may be, I'm sorry, but the only answer that I can get to in managing a portfolio is manage it so that you make the money that you need to make when you need to make it. Because otherwise,
too many conflicting priorities.
It's almost impossible. I'm not saying don't live a life that's true to your values. I'm saying that your investment portfolio is a really bad place to try to express those.
The New York Times is having this piece today, and what they talk about, one individual who has talked about this new product that allows you to do direct indexing. So effectively, this allows you to build your own fund of companies directly with an investment custodian and exclude certain companies or include others, which, again, if you have a very narrow set of values, makes this possible. But I think the biggest message that I have for people out there that are trying to place their values on investing in one way or another is just to beware of the limitations, and then also be suspicious of anybody that's telling you they have the perfect way to do it. Because in my personal experience, most often that's just led to a very high cost product that probably doesn't check all the boxes that you are looking for. Direct indexing might be an example here where there are fees to be paid. Funds that contain the ESG label, on average, I believe that most of them are more expensive than their non-ESG counterparts. And that's where a lot of my skepticism has gone is, wow, in a lot of cases, this has been a really good opportunity for big investment companies to slap a label on something and charge a higher fee.
The dirty secret of ESG funds is not that they're trying to do some great evil in the world. It's that they basically do nothing and charge you higher fees. Like, I'm sorry, that's kind of what the deal is.
If you have your own questions about trying to place a set of values on your investment portfolio, maybe you want to prove me wrong, or maybe you just have questions about it and what it might mean and the different tools that are out there, I tell you, we'd love to talk to you about it. This does not necessarily mean ESG. It could be any different series of values, but understanding the drawbacks, the additional costs, and the complexities around it, I think far too often gets just paved over because the easiest thing to do is slap a label on something and sell it for more money. If you have questions along these lines of how your portfolio can better reflect your own values, like I said, I think it might be difficult to do so, but give the folks at Armstrong Advisory Group a call. We're happy to have an honest conversation about it. The phone number is 800-393-4001. I'll say that once again, the phone number for the Armstrong Advisory Group, where you can book a free consultation at any one of our offices across New England, is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In March, the Consumer Financial Protection Bureau announced that they would put in place a federal rule that would cap late fees on credit card payments at $8 a month.
So this is not interest on late credit card balances. This is fees on late credit card payments.
Friday, a judge in Texas said, nope, I'm blocking this rule because I think it's unconstitutional. So obviously this will be appealed by the CFPB. It'll probably go through a whole big rigmarole. Maybe it makes it to the Supreme Court. Maybe it doesn't. I don't really know.
And my understanding would be that this is the judge questioning the rulemaking ability of the CFPB.
Yes.
It's not questioning whether or not $8 is reasonable. It's not saying whether or not credit card companies should be able to charge this at all. It's merely saying that Congress didn't pass a law here. The CFPB did. And effectively, the CFPB is creating some pretty serious new rules across the economy without... Well, and questioning whether or not they should be able to do so, I think is the end story there. Is does the CFPB actually have the legal authority to create rules such as capping monthly credit card fees?
So let's talk about what the upshot is at the moment. So right now, the average late fee on a credit card at the moment is $32. That's according to data from the CFPB. So that's the average late fee that's currently charged is $32 a month. Not the interest, as you know, but the late fee. Mike, do we believe that there is a right amount that there should be for late fees for paying your credit card too late?
No.
Do we think that we can get there if we just think really hard about it, and maybe if we just put in a little more thought, we're going to be able to get to the right amount of late fees?
No. It also doesn't fall into a category that I would describe as non-competitive. If I don't like the late fee on my credit card at one place, I may be able to switch it over to another credit card that charges a lower late fee, as far as I know. There are a lot of different credit card issuers out there, and they're also not hiding this late fee. When you sign up for a credit card, you get a disclosure that's actually reasonably easy to read in terms of what you're going to be charged.
Now. It's like one page, basically.
Yeah, it's pretty simple. So there are other areas like, I have no choice but to pay this fee. There are no other options for me, and it is hidden and secret, and they make it tremendously difficult. We talked about gyms being a good one, right? Hey, if you're going to make it this difficult for me to unsubscribe from your service, then you should make it this difficult for me to subscribe to your service in the first place. This is not that.
The CFPB estimates that this change would save American households $10 billion a year in late fees. Do we think it actually will?
No, they'll just jack up interest rates instead.
It'll go somewhere else. It'll be a different fee, a different this, a different that.
Visa's not just going to say, yeah, okay, we'll make less money now.
Well, not Visa. They don't lend.
Okay.
They just process the payments. Chase.
Yeah.
Citi, whoever, the actual institution doing the lending, they'll figure out how to do it somewhere else because this is just what happens. So I'm a big believer that government at any level exists to solve problems that individuals can't solve for themselves. This, as you noted, individuals have a bunch of different recourse, including not even taking out a credit card if you don't want one. You don't need to have one. This is not like, hey, like my neighbor's spraying pesticide on my land. Okay, that's probably a problem where you want government to step in because it's a problem if you don't want it, like them doing that. My credit card fee is too high. Well, what should the fee? Like, this is not a government problem in my opinion. I when it comes to like predatory lending, if you want to say, hey, some of the like non-disclosures that you get from, payday loans and things like that, okay, fine.
Well, but even then, I'll go back to a fundamental piece here, which is this is why Congress exists. If we suddenly believe that, yes, credit card companies should be regulated in terms of how much they charge in late fees, then call your congressman and have them pass a law. I don't think you should, but if you want to, then go that route.
Let's take a quick break here. When we come back, we got Stack Roulette.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John. Enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, what do you got for Stack Roulette?
I just have to go back to a story Tucker mentioned at 10:30, which is GameStop's surge today. So if you missed it, GameStop stock as of right now is up about 63%, was up as high as, 105% we saw at one point?
Yeah.
Been halted several times, and all of this is on the groundbreaking news that Roaring Kitty, whose real name is Keith Gill, who was part of the big, the short squeeze action of the meme stock craze of 2020 and 2021, posted something on Twitter for the first time in 3 years. What he posted was an image of a gamer leaning forward in their chair, which would insinuate that he's engaged, interested in paying attention to what's going on, presumably with GameStop right now. If that is enough to drive your stock up by 100%, and you are an investor who's basing your investment philosophy on this, then I think it might be time for a look inward here and buyer beware on any of what happens next, because that is kind of nuts.
It's gambling.
Yes. Yes.
Let's call a spade a spade. It is gambling.
Yep.
Planet Fitness is going to raise its $10 membership plan for the first time in 26 years. Talk about some inflation.
Yeah.
They're moving.
It's like Arizona iced tea.
They're moving to $15 here. Now, this is not for existing members. You will not have your $10 price changed.
Wow.
But for new members starting this summer, it will be going to $15 a month.
I've got to imagine with Planet Fitness, there's a pretty heavy membership turnover, so they're going to see that $15 rate pretty quickly.
I don't know how heavy the turnover is because, like most gyms, it's almost impossible to cancel.
Yeah.
You got to go there in person or send a letter by certified mail in order to cancel. And even then, it's like, please allow X days for processing, blah, 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 even though you can just sign up online.
Yeah.
So they haven't said why they're doing this, but the obvious reason is because they want to make more money. Look, it was said in the piece they haven't said why they're doing it, so I don't know. One thing that I did find interesting, they are seeing a major trend away from people visiting their gym for cardio, and so they are reducing the number of cardio machines that they are bringing in to replace old ones, and instead will be shrinking that space and adding more space for lifting the weights. Pick things up, put them down.
There was an insane amount of cardio equipment at Planet Fitness when I was going. Like, it was not even near the enough space of weightlifting and everything like that. So that makes a lot of sense.
I believe that part of this, in terms of how this works, I wonder if this is an appeal to their franchisees, because I believe most Planet Fitnesses are franchised.
Okay.
One of the main ways that the actual corporate makes money is through selling machines to the franchisees, because if you've ever been to Planet Fitness, it's all purple machines.
Branded.
Yeah. So I think Planet Fitness, I believe the way it works, their corporate buys it and then sells them to the local. And part of me wonders if they've been getting a little bit of pushback from the locals about, hey, we can't afford to buy these machines anymore because the costs of those have gone up.
Give us some free weights.
And so this is a way for them to get some additional cash to the franchisees here. Just tossing that out there.
Staying in that athletic realm, the winner of the 2014 Boston Marathon finally got her prize money, but in even more embarrassment to the BAA.
They paid it in pennies?
No, it's because a big fan of the Boston Marathon who attended Boston College and lives in Philadelphia, his name's Doug Geyer, was so embarrassed for the Boston Marathon organization that he cut the woman a check himself. He just sent her $75,000 because this is such an absolute embarrassment that a woman won the Boston Marathon 10 years ago, and the Boston Marathon has not paid her. Why? Because they paid the wrong person who turned out was doping, and they couldn't recoup the money from her. So they said, well, according to the whatever organization oversees marathons globally, we don't have to pay out the correct winner, so we're not going to.
Isn't the lesson of this that you shouldn't pay out any winner until you finish the doping tests?
Well,
in the future.
Yeah, that would be a good idea.
Wait until the tests come back before you pay out.
The main lesson is you're a multi-million-dollar organization. Pay your winners what they're owed.
That too. But also, from now on,
So,
no money goes out until your tests come back.
Thanks, Doug from Philadelphia. We appreciate it here in Boston.
We're done for the day. See you tomorrow on the Financial Exchange.